Hello everyone, welcome to Elliott Wave Analysis.com YouTube channel. This is Henry and today is Wednesday, February 16. The time is around 2 a.m. GMT, and for today we will be taking a look at Nike NKE 60 minutes chart. Now this stock here is covered under group 3. We have 3 groups in our service, and this is the short-term view 60 minutes chart. Now we can see right here that we ended this with 2 correction in the this one is in cycle degree, right? Is in the cycle degree, and that means we have started the with 3. Based on this view, we have started with 3 to the upside. Now of course, when you have with 2 completed here and the arrow is just in black in color, what that means simply is that if you zoom out, right? If you zoom out to the daily, let's say this is you with 2, right? And you started with 3 right now, that means you still need to break, technically speaking, above that previous peak in order to confirm that we will not be doing a double correction, right? Double correction is always a possibility. Now, the fact that if we are calling this with 2 completed here, so what we are saying here is that at the least, that means this cycle is finished. This cycle is finished. Now, if this cycle is finished, at minimum, the expectation is that minimum expectation is you should be looking to correct this cycle in a big 3 waves, right? When a cycle is complete, the minimum expectation is a 3 waves reaction to correct that cycle. Now, so far, we have not gotten any 3 waves reaction from the low just yet. Now, if this is truly complete, not going to be doing another double correction, then yes, this could be in the beginning of the next leg up to the upside. Now, if you take a look at the daily here, it does look from here, from the March 2020. This is the COVID-19 low. It looks like some kind of like a 5 swing or a 5 waves, right? Overlapping is fine if it is a diagonal, so don't need to worry too much about overlapping. And the question then becomes whether we really finish the correction and we are ready for a new high, or whether this is just the first leg of a bigger correction. Both are still equally possible, but I want to focus on the more short-term and medium-term right now, and I will explain to you basically what we should be observing to improve the chance for the move to the upside. Okay, now first of all, you can see so far what we see here is a 3 swing from the lows, right? So we got a pretty decent rally, but so far it looks to me only a 3 swing. So I think to improve the chance that we are going to see more upside, the best thing to do here is really to wait to see if we can make a marginal high again. Now, if we could see another high, that will improve the odds from the bulls, since we then will see a 5 ways up, and that will improve the odd that we can get another leg up again, as long as we don't break below 137. Now, if we break down from here, however, right, then that means this is only a 3 ways correction, and then we can continue to go down. So again, this marginal high here is going to improve the odds if it can happen. All right, so just wait for this. When it does make another high, then that will improve the odds of this view. Secondly, if you take a look at the daily again, now you notice here that if I have to sort of come up with the count for this, remember this is a C here, and there is a 5 and 4, so this is a C, and there is a 4 5 3 4 5, so that means this entire move is labeled as a impulse. The subdivision of the C is an impulse. 4 5, the 4 is a triangle, this is the 5, and this is your 4, this is your 5, and that means this is your B, that means this is your A, right? Based on the 1 hour chart, if you understand Elliott Wave, you can sort of try to understand, try to figure out the larger degree time frame. Not all. I mean, we got all the labels in our service, but at least in the some aspect of the cycle, you can figure out what really is the count. Now, you can see right here, if you measure the AB, now you notice from the peak here, you hit the area, the 100% extension area, right? Now that's typically when a 3 swings is going to finish, whether it's APC or whether it is a WXY, right? That will be usually where it ends, if it is a corrective structure, right? Now if it is an impulsive, typically what we want to seek as a guideline is that your third swing hit the 161.8, because per the guideline, with 3 usually is the strongest. Not a rule, but it's usually the strongest. And that's also one guideline that a lot of people misunderstand. They think with 3 has to be in the longest and it has to reach 1.618, when the rule actually only says with 3 cannot be in the shortest wave, right? So with 3 can be even shorter than with 1, as long as it's not the shortest wave. As long as with 5 is shorter than with 3, for example, with 3 can be shorter than with 1, and that doesn't violate the rule. And it doesn't always have to reach 1.618, and that's one rule that a lot of people misunderstand as well. Now over here, we started to rally after reaching the 100%, but at the same time, I would say the rally is not significant enough yet to really have a very high odds that this cycle is truly complete, right? Now I still need to see a little bit more upside here, extension, to really get a little bit better odds that this cycle is complete. Like I said, if we just get this marginal high, that will improve the odd at least for another leg up. So assuming, let's say, assuming we can get that marginal high and showing 5 waves, it will improve the odd. We can at least get 3 waves like this. Like I said, until it breaks above this previous peak, technically this could be your W, this could be your W as a 3 waves, and this could be your X, and this could be a Y to the downside. However, a marginal high above here is going to improve the odds of at least another leg up like this minimum. So the principle of minimum expectation, basically, right? If the cycle is finished, the principle of minimum expectation is a 3 years reaction, right? Even if this is W, you still get 3 years reaction, and you will get 3 years reaction. It will improve your odd if you can get that marginal high right here. Okay, so it's very simple. So once you see this, then that will improve the odds. We're gonna get at least one more leg up, as long as we stay above 137. But if we don't get this and we sell off, then it's only 3 waves so far. Then another possibility will be that we are still within this C, because like I said, the reaction higher has not been that great, has not been very quite a lot of reaction from the lows. So we still can be within with C here, or we could even be a wave 3, right? It could be wave 3 from here, 1 2 3. So then I think the sign will be this marginal high to get a better chance for another leg up here. Okay, so as always, we're gonna be providing updates regularly in our service, and we have 14 days trial. The link is provided in the description of the video. I'll see you all again next time, and have a nice day, everyone.